Now on the business desk, National Debt Advisors has flagged a growing trend in borrowing against expected tax refunds. The body warns that this recurring practice creates severe financial risk. It says treating an anticipated refund as available income before it clears often traps financially distressed earners in cycles of short-term credit. Consumers are further advised to never spend these funds until the cash actually lands in their bank accounts. For more on this, National Debt Advisors Debt Counsellor Sharon Mmitsi speaks to us. Thank you so much for your time, Sharon. Do tell us about what has been picked up in this trend as part of annual consumer behaviour.
The problem is just because you get that SMS that says that you are expected to get a refund of this much, people tend to budget on that amount, forgetting that before you get that amount, there are some things that needs to be done. For in case if you owe tax, or maybe if there are any penalties that you were charged, that amount needs to be deducted first before you get your refund. So people tend to oversee that and then just budget on the money that they'll be told that they are going to receive. And that's where the problem is.
What kind of problems do consumers then encounter because you've done the maths in your head, anticipating this money and looking to close maybe valid gaps in terms of the debt that one may have? But as you rightfully indicated, not all that is calculated by SARS belongs to you.
You now start borrowing money so that you can be able to cover up for expenses in your household because you think you're expecting a certain amount, or maybe start borrowing money for whatever that you want to buy. But now the problem, when you get the refund, the money that you get is not the amount that showed on your SARS that you're going to get. Now you start panicking that the money that you have now, the one that reflects in your bank account, it's no longer enough to cover for everything that you did or even cover for the debts that you made.
Let's go back a little bit, Sharon, and speak as well as break down how consumers in South Africa find themselves in the situation that you've just painted out. It's a depressing issue that we often speak about around over-indebtedness.
You log into your SARS, you check how much is your refund or how much are you liable to get a refund for. And the thing is, you don't even check first if you have any penalties or if there's any money that you need to pay back to SARS. Now, when you think of that amount that you saw before it even gets into your account, you start doing your calculations. You borrow money maybe to cover up for that, whatever you want to cover up for, or maybe for household expenses, or maybe those utilities. The money comes into your bank account, now it's no longer the money that you were expecting. You already used the money that you don't have. Now you have to take another loan to cover up for the loans that you took because you're expecting a certain amount that you didn't even calculate first before you, or you didn't even plan first before you even borrowed any money.
Lastly, what's the best way for consumers to spend what they would be receiving if they're lucky enough to get a refund in this tax year?
The first thing that you should do, you should request a statement of an account before making any refund. The other thing, you need to check for your outstanding returns, your penalties, interest rate, or even the tax debt. Wait for the refund to reflect first in your bank account before making any decision. That is when you can be able to plan from what you have, not plan from what you think you are expecting.
Thank you so much for your contribution, Debt Counsellor at the National Debt Advisors, Sharon Mmitsi, talking to us about borrowing against expected tax refunds. We move on to other business news.